Hey, good morning. This is Mayor Valensky with Driving Markets. Driving while talking about markets. Remember, anything said in this piece is an opinion only. It's not investment advice and not financial advice. It's here pure to give you a bit of education, give a market wrap, give you some ideas, and that's it. Any trading you do is in your account. The profits and losses are your money, nothing to do with me. Let's kick off. So the markets had mixed closing on Friday. The Dow was up 129 points at 33,826. The Nasdaq came off 68 points at 11,787, and the S&P was down 11 points at 4079. FTSE was down at around about the 79.80-85 level. That was the FTSE. Let's kick off and let's see what is driving markets and what will be driving markets this week. Okay, so overall, what's driving markets at the moment is overall fear. Fear of what's going on regarding inflation. Remember, I had some numbers out last week. Again, one of the viewers, one of my colleagues, Phil, indicates sincerely, he says these were lagging indicators, the CPI, the retail sales, and of course the PPI. They were all lagging indicators. In other words, it's what historically happened in January, inflation numbers and retail sales. He's saying leading indicators like the price of energy is dropping, but not the price of foods. So if the lagging indicators, which is true, and the whole market was assessing based on lagging indicators that inflation would go down, and based on lagging indicators inflation went up, then what are lead indicators? What is going wrong in the inflation measure? If the lead indicators are indicating that inflation is going to go down, then why is it that inflation's gone up? Quite simply because some of the numbers that come in to measure the inflation are only part of them are lead indicators. Most of them, of course, are lagging indicators. When companies report profits or report sales, they can't forward date the sales that we're going to do this month, and then those numbers add up. And when, of course, the numbers come in measuring the cost of foodstuffs, okay, so the foodstuffs is not a live lead indicator. It's historical. When companies report, or corporates, or the measures, the Labour Department comes in, what is the historical price of food? And the main driver in inflation at the moment is going to be the energy and the food prices, okay? That's really what I believe is going to be the driver for inflation. And with the fears of inflation, you've now got the Fed likely to raise rates by at least 25 basis points in March. In fact, there's two governors that are calling for a 50 basis point rise. If there's a 50 basis point rise, you'll see markets come off even more and the dollar go up. Of course, it looks like we're coming to the end of the inflation cycle. It looks like we're coming to the end of the interest rate cycle. That's what it looks like. But I think the Fed has it wrong. It has it wrong. In the markets, the analysts have it wrong as well. I sincerely believe that inflation is going to tick up. The war in Ukraine is only going to get more intense. Putin is not going to withdraw and could pull in other countries. That is an outside bet. It's a long bet, but he could pull in other countries. It's also shown him to be geopolitically weak, and his army is a bit of a ragtag and not performing as a superpower. And as a result of that, he's going to have to prove that he is there. And he's not going to walk away from Ukraine unless he gets an absolute solid victory to show the world that Russia is a superpower on the map. Also, looking at China, if we get Biden in, I mean, Biden is for another 2 years, but if he comes in again, then China's just going to invade Taiwan. That is pretty on the cards, in my opinion. Again, a long outside bet. Looking at going back to financial markets away from the geopolitical situation, you've got last week a slight weakening of the dollar on Friday against the yen. Strengthening against the yen. You've got weakening against the euro and the pound. Overall, I would say that as fears of inflation rise, you're going to have a slight strengthening in the dollar. US Treasury bonds came off slightly 2 pips on Friday at 383, but I expect those to creep back up to the 4 level and the 4.5 level as inflation fears and interest rate fears persist in the marketplace. Bitcoin, interestingly enough, came all the way down, hit 25,200, came all the way down, running over the weekend at 24,600, wants to test again the 25,000 level. Massive resistance at 25,000, but as the markets come off, as interest rates rise, you see the high risk assets fall. Two particular shares that I think are up for selling is Tesla has gone far too high, far too fast, and of course my favorite, which is Facebook or Meta. Okay, even though they had great results at their last quarter and they came out and said we're going to do a share buyback plan and they're going to have layoffs, that's only going to support the share price, the layoffs. But I do think they're far too high, and I think Tesla is going to come all the way down to 140. Those of you who are Tesla traders probably going to come down to 140. Keep an eye on that. This week you've got Monday, a holiday in the US, and on Wednesday you've got the minutes of the FOMC meeting, which will be interesting read to see where they internally view interest rates and inflation. And on Friday you've got the PCE in America, which is a personal consumption expenditure. Big inflation number to measure, big one to keep an eye on. This is Meir Walensky with Driving Markets. Have a good day.